Wednesday, January 6, 2021, Maneco 64, home of alternative economics and contrarian views. So Billy actually had his haircut yesterday. We've got a mobile groomer. She used to have a shop, but she closed that down about 2 years ago. I think it was a good idea. Her overheads are getting too big. She's got 7 dogs herself, so she loves dogs. So Billy smells really good. He's trimmed. She does a really good job. She actually increased the price, but she's still very competitive and maybe even lower than other groomers. So that's not a problem for us. Anyway, today I want to look at the CRB Index, which is the Commodities Research Bureau Index. It's an index that was created back in 1957. It's got a broad composition of all commodities, really, like precious metals, base metals, energy, agricultural. So very indicative of what's going on with the commodities prices, with the dollar, of course, because every commodity is still priced in dollars. So if commodity prices are going up, that means the dollar is going down. And I've been talking about that quite a bit. If you're a regular viewer in the channel the last few months, I've had guests on like Rafi Faber, who's been talking about the backwardation in commodities, which is a sign that people want commodities and they want to get rid of dollars. So about a month ago, 11th of December, I made a video. The CRB Index is flashing a major warning for the dollar. And this is the same. This video is, consider it a part 2. And I recommend you watch the first video so you can understand what the CRB really is. I go over it over there. Today I'm just going to focus on where we are in terms of the CRB. I'm going to look at some commodities and show you some charts to see how it's really picking up. I spoke about as well a chart from Incrementum AG in Liechtenstein. They're based there. They've got a chart comparing commodities to the stock market over the last 120 years or so. And you'll be amazed how undervalued real tangible goods like commodities are right now, and how much room they have on the upside. Of course, on Wall Street, on the mainstream financial business news, they make it seem like it's a reflation trade. They don't call it inflation. They make it seem that it's the economy picking up, that everything will be under control. Yes, bond yields might rise a little bit, but the Fed has our back on bond yields and all that. But I would say it's a lot more serious than that. Wall Street and the major economists, the Keynesian economists, they always seem to ignore the debt. And as you know, 2020 was a crazy year for the creation of debt, not only public debt, government debt, but also corporate debt. I think there was 5 trillion of issuance from corporations, from Uncle Sam as well, trillions of new debt. And they seem to forget that that debt needs to be serviced. And if the economies of the world are going to remain under pressure because of what's going on, this crisis, this engineered crisis, as I've said in the past, and I will continue to say it, there's a lot of uncertainty. So if the dollar continues to drop, as it has been dropping, if interest rates really spike, a lot of this debt is going to be harder and harder to service. And in an economy that is not picking up, of course, there is all the political uncertainty that is going to be solved in the next 2 weeks, of course. And today is a very important day. I saw the results from the Georgia Senate runoff. And I see that the mainstream media is calling for the Democrats to win both seats. That would be even more threatening, I would say, to the dollar, even though if you go back through the administrations in the last 25 years or so, it's not necessarily the Democrats, when there are Democrats in the White House, that you see the debt go up, because it seems to happen with every party. I think the important thing here, if these two Senate seats are filled by the Democrats and we have a blue control of the White House and the Congress, that will mean no gridlock. That will mean it will be very easy for DC to really inflate the system, and we could be in for a real wild ride in the markets. I would say the dollar would be under pressure. Of course, there's a lot of disputes as to who really won last night. I think they've called it, the Associated Press is called the election for Raphael Warnock. He's the Democratic candidate for the Senate. The other race is too close to call, even though it looks like the FT is trying to call it for the Democrats. We'll have to wait and see. And of course, we have still the small problem of the presidential election. It's very divided. We'll have to see who's going to be inaugurated 2 weeks from today. I think that's still not certain. But one thing is certain, I think the dollar is going to keep going lower and the commodities are going to keep going higher. So I'll show you a couple of charts here, or a few charts. This is the CRB Index chart. This is a weekly chart. And going back to like 2006, you can see in 2008, it topped almost or at 500. In 2011, when gold and silver traded up, while gold traded to new highs at 1920, silver traded up to 50, which was an old high from 1980. The CRB didn't really go up to a new high. That probably was not a good signal for the overall commodities market. But look where we are right now. I mean, we've just gotten back above the 2016 low there. And of course, in March, we had a big drop when everything crashed. But now we're going back up. And the important thing about this chart, in my opinion, is the fact that there's so much room on the upside. And I'm not going to show you a chart of the stock market because you've probably seen those a lot. But the stock market is the other way around. It's way up there, right? And commodities are way down here. And we could see a very easy shift. And it doesn't even have to be that much percentage-wise of investable assets into the commodities, because a lot of fund managers, people who've been around for a long time, they see the stock market as very overvalued. I read yesterday a piece by Jeremy Grantham. He's been a fund manager for over 50 years, very famous. He said we could keep running for another few months in the stock market, but he thinks we're in the euphoria moment, and he thinks it's one of the biggest bubbles, like 1929, 2000. He thinks we are in a huge bubble. So yes, even if the stock market comes off, and then the mixture of loose fiscal and definitely monetary policy would really hit the dollar hard. So I'll show you a shorter term chart here of the CRB. So if we go back to the 11th of December, when I made my last video, we were around 161. Now we're at 171, as you can see there. The move yesterday was quite big. All the commodities are doing really well. Gold and silver had a quiet day yesterday, but they had a really big day on Monday. So that's how markets work. So now the dollar index let's go back and see. I mean, the dollar index has been a one-way street lower since its top back in mid-March or towards the end of March. On the 11th of December, though, we were trading just around 91, and now we're below 90, approaching 89. So I think that should continue. As I've said before, markets don't go up or down in a straight line. We could have a correction higher, but the corrections have been very anemic, as you can see by the chart. So now let's look at the markets, like some of the individual commodities markets, some of the charts. Platinum, for example, I made a video a few weeks ago, maybe a month or more, that it looked like it was breaking out, and it looks like it has broken out. We're now at 1100. And platinum, of course, is a precious metals. I focus mostly on gold and silver, but it is a good sign that platinum is breaking out. Platinum is still got a lot of room on the upside. I think platinum is breaking out a lot like silver did last year. So there's still a lot of room for platinum. The other worrying commodities, commodities that are really important, even not to say that all commodities are important, but for example, wheat, as you can see here, wheat is making multi-year highs here, going back to 2015, as you can see, Chicago wheat. Corn, look at corn. I mean, these are important commodities for nourishment, right? For food. Soybeans, same thing. And as I said earlier, a lot of these commodities are in backwardation, which is a bad sign for the dollar. That means that there's very big demand in the short term for commodities. It's not a case that one commodity has a shortage or anything. And when that happens, it means there is no demand for the dollar. So I think it's very serious. We're seeing copper as well, as you can see here. We're seeing nickel go up. We're seeing aluminum or aluminium, iron ore, zinc. So all these commodities are starting to motor, and there's a lot of room. As you can see by this relative value chart from Incrementum here, how commodities are undervalued versus the stock market, which is really a representative of paper assets, I would say. Not to say also that bonds aren't overvalued. Treasuries are overvalued. They've been manipulated. And of course, the Fed can always print more, but that will hurt the dollar even more. So, yeah. I think it's only going to get worse for the dollar. It's going to get better for commodities. It's not as clear cut for the paper assets. We could see the Fed and Congress and the new administration, if it is a new administration, continue to inflate the system. We could go into a hyperinflationary event, and even stock prices sometimes hold on in that scenario. So yes, I think things are still pointing to a weaker dollar. Commodities are confirming it, and we're going to keep an eye on commodities. So with that, let's look at where the markets are this morning. It's 10 to 9 a.m. London time. Gold has actually just rebounded in the last 20 or 30 minutes. Earlier this morning, when I was checking the markets, gold and silver were down. Now we're actually going up, which makes sense, but it's tough, of course, predicting prices in the short term. But right now we're at 1955, up $5. Gold range has been 1941 to 1956, so right near the highs. Silver is up 12 cents, or just under 0.5%, so outperforming a little bit gold, but still not really motoring ahead. But there's not much resistance until 30. I think if we break 28, for example, we could see the silver price really go up very quickly here. We're at 27.65 anyway. Range has been 27.76 to 27.18. The stock market right now, the Dow future is down 15 points. The S&P is down actually 22 points, or 2/3%. And more interestingly, the NASDAQ 100 future is down 260, or 2%. So interesting situation. The other thing, before I go to the fiat currencies, usually I finish with the bond market, but the 10-year yield is actually broken above 1% today. Yes, it's only up about 5 basis points, but it's quite significant. People have been keeping an eye on that. So yeah, the high's been 1.02% in the 10-year yield. Right now, we're exactly at 1.00. So up 5 basis points. We'll have to keep an eye on that. See if we get a fast spike higher. For example, if we were to go to 120 today, which is very possible, then people should worry. But if it keeps creeping up, it is worrying, but not as much, I would say. So back to the currencies. So we've got sterling basically unchanged, up slightly at 136.36. So before I move on to the euro versus the dollar, just wanted to say that I was looking at the euro versus sterling, and I think we're at some really important technical long-term resistance. And every time it gets to this level, the euro corrects versus sterling. So it'll be interesting to keep an eye on this, because if the euro really motors up versus the dollar and sterling doesn't really move up versus the dollar as well, we could see the euro move up even more versus the dollar. It could be like a double whammy, because we could see people short covering, buying the euros versus sterling. So I think we're at some really critical juncture here technically for the currencies. The euro is up fairly substantially this morning. 0.25% is a fairly big move for the currency markets. The dollar is a little higher versus the yen, is up 0.1 at 102.82, and the dollar is at 6.44 versus the yuan, pretty much unchanged. Crude oil, we're just below 50. Yesterday, we had news that Saudi Arabia is going to cut production, I think, by 1 million barrels. And that took crude above 50. It's come back down, but it's still over $2 higher than we were yesterday when I made my video. We're at 49.83, down about 0.2. And yeah, the other commodities, as I said, they're looking very good longer term. And in the short term, they've moved up quite a bit as well. And just to conclude, I think we're seeing the start of a move away from paper assets into commodities. It's not going to be, of course, the whole shebang. It's not going to be all investable assets moving towards commodities. But even if you get a small percentage, the commodities market is finite. The paper markets are infinite, right? The Fed creates paper out of thin air. Commodities are a lot harder to produce and create, right? So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Parler, and all these other platforms below here. I wish you all a great day. Take care. Bye.